I wanted to have a really good answer to the question. I wanted somebody to come back and say, Cody, since Goldman Sachs beat earnings by 56 cents, coming in at 395, and they beat revenues by about 300 million at about 7.89 billion in revenues. I wanted somebody to come to me and say, hey, say something funny, say something engaging, tell me why Goldman Sachs is down almost $6 at the end of trading today after bringing in earnings per share that's remarkable, 56 cents. Come on now. How does Wall Street not even be able to get close to that number? But I don't have anything. You know why? Because I'm kind of as baffled as everybody else is. I think the financials in the United States are doing a lot better than they're actually getting credit for as far as everything picking up, everything moving forward. The financials in the United States seem to be sitting around a really good price to earnings. Everybody sits around 12, 13, 14. Everybody's price to book. Everybody that's reported pretty decent earnings so far, Wells Fargo, JP Morgan, they're a little bit over 1. Goldman Sachs falls in that exact same category. Actual price to earnings at 12 for Goldman Sachs. So not only do they beat earnings per share, not only they beat revenues, not only they have a good price to earnings, their price to revenues, their price to cash flow is really good. I mean, it's really good for what they do. They're not a retail bank on the same level that a Bank of America or JP Morgan Chase is, or Wells Fargo is for that matter. They're not bringing in the same type of revenue, but they're doing a good job of making sure that revenue turns into something profitable. They're not just blowing that money away. But the trading desk was down. We've seen that with a bunch of banks so far. Everybody that's reported has said, there's no market volatility. We're seeing a decrease in people needing to come and spend money with the financial advisors, to pay commissions, to pay for trades, because everything you're in is doing all right. Why would you mess around with something that's working? And that makes sense. But is that something that's going to remain the consistent? I don't think so. So are banks easing off of actually offering all these services? Are they doing a bad job? Probably not. It's just a matter of the market right now is so strong, it dictates that people don't necessarily need to overutilize a lot of these services. Goldman Sachs seems to be doing good in everything else. Their investments, their lending is up 43% this year. That seems to say to me that they've noticed that there's a bit of a change inside their structure of their bank, something that they need to do to fundamentally change where revenues come from. Up 43%, up to $1.5 billion. So clearly this is something that they weren't doing a whole lot of to begin with, and now find themselves doing quite a bit of. And I would imagine at 43% growth, we're going to see quite a bit more of it. So while I don't have anything witty or funny to say about what Goldman Sachs is doing, I definitely would tell you that the banks are a very good barometer of what's going on in the country. While the stock market isn't really enjoying Goldman Sachs that much, even though they find themselves down to $223 and some change a share, down $6 today. But they're doing really well. So are all the banks. You don't have that kind of free cash flow and a price to earnings that low if people are overvaluing you. These banks just have a part of their sectors, especially their trading desks, and some operating costs that aren't doing very well. They're going to do some reorganizing. They're going to figure out exactly where they need to be putting their focus. These are strong companies.